To invest or not to invest in Yes Bank stocks? That is the question, my friend. Retail investors are asking once again, not for the first time, not for the second time, but for the nth number of time in the last 4 years. It's almost like retail investors have a toxic relationship with the Yes Bank share and they just can't let go. Right, but the whole story started in late 2018 when the Yes Bank shares declined by more than 50% in under 1 month, and investors thought, well, बड़ा bank है, अभी तक multi-bagger है, so why not invest in it? And also they confused a 50% correction with a 50% discount. So a lot of these investors invested, and luckily some of them made money. So the next time in between April and May 2019, when the stock declined by more than 50% again, both the types of investors, the ones who had invested in the recent rally and the ones who had stayed on the sidelines and missed out on all the action, both of them piled into the Yes Bank stock again, because the ones who made money were confident that they're going to make money again, and the ones who had stayed out did not want to lose out on the opportunity, so they said, well, I'm going all in. Right? But the stock price continued to decline, continued to fall until November 2019, when a news article declared that RJ had invested 87 crores of his money into the Yes Bank shares. And now the third type of investor who had remained totally outside, watching from the sidelines, he said, now I'm also going to invest because RJ has given his stamp of approval. What a lot of investors failed to realize was that for 87 crores, while it is a large sum of money for most of us, for RJ, Rakesh Jhunjhunwala, that's less than 1% of his net worth. Whereas you, my friend, invested most of your savings over the last 5 years that you had saved up. But the stock price, after a brief, increase from 40 to 60, 70 rupees a share, continued to decline until the first week of March 2020, when the government and RBI stepped in and said to Yes Bank management कि तुमसे ना हो पाएगा, we're going to formulate a bailout plan and we're going to bail you out, right? And according to the terms of this bailout, the whole idea was that SBI was going to take a 49% stake into the new, Yes Bank after the bailout, and a lot of other banks such as Kotak, HDFC, Federal Bank, IDFC, all of these guys were also going to chip in some money, to save the day. And even marquee investors such as RJ and RK Damani also invested. And the idea was that 75% of the shares that were allotted to these new investors who had put in the money to save Yes Bank, 75% of these shares would be locked in for a period of 3 years from the date of the bailout, whereas 25% could be traded. So as soon as the moratorium on trading of Yes Bank shares opened up in the second week of March 2020, there was a lot of trading and the share price began to go up because there was a huge amounts of demand for the stock. And where was the demand coming from? Who was buying? Who was selling? Well, people who were selling were these institutions, IDFC Bank, Federal Bank, mutual funds. Even the promoter was selling. And who was buying? Well, retail investors like yourself. And again, the stock declined once again from 40 50s, the high of 40 50, because the COVID lockdown happened, and since then it has been somewhere around 13 16, and recently again the stock price has increased around 30-40% over the last 1 year. And once again the question remains, to invest or not to invest in Yes Bank stock. So in this video I'm going to attempt to answer that question in as logical a manner as possible. Right? But before we move on to the analysis part of the video, I just have a simple request. As always, if you like anything about the video, please feel free to click on the like button, and more importantly, please consider subscribing. Every single subscriber means a lot for us, and this is a lot of hard work. So when you subscribe, it's a big thumbs up. So with that said, let's continue to the analysis part. And I think no analysis is complete without at least analyzing the mistakes of the past. And in the case of Yes Bank, I believe that most of the decisions retail investors have made, the buy-sell decisions, have been based purely on signals. Now, signals are corporate actions, government actions, large investor actions that give us some information about the underlying reality of what's happening within a business, around the business, right? So for example, when the RBI refused to extend Rana Kapoor's term as a CEO of Yes Bank in late 2018, it was a very clear signal that RBI was not happy with the way the bank was being run, right? But who knew the extent of the rot inside the bank? We didn't find out at least till 1.5 years later, right? Again, similarly, when the new CEO was appointed, took over March 2019, that was a very clear signal that potentially, there is a turnaround happening. But we had no idea how successful he'd be and how quickly he'd be able to raise the required capital to keep the bank from going bankrupt. Right. Similarly, late November 2019, when Ravneet Gill announced, Yes Bank announced that they were in talks with investors for around $3 billion, and $1.2 billion out of that they had received a binding offer. Right. Who knew that was never going to come in? Similarly, a week later, when RJ announced that he had invested 87 crores, we had no clue what he was thinking. What if he sold the stock the very next week? He was not going to come and tell us that he's selling it. We had no idea whether he was trading on them, investing on them. What was the mindset? Nothing at all, right? Yet, investors used all these signals, right, and acted on them almost as if they knew what was going to happen. And I think this is a very important characteristic of signals, because signals give very limited information, important information, but limited information. Sometimes investors, in the absence of real facts about how things work, tend to fill up the gaps by their own wishful thinking. And that's what happened in the case of Yes Bank. I'm not saying that signals are completely useless, right? They are very, very important. However, if you make decisions based purely on signals, just know, right? Just accept it. Just look yourself in the mirror and say, I am speculating, right? Right or wrong, that's up to you. I believe that's totally wrong. But each one to his own. Just know, just accept that you are gambling, and then go on from there and do what you need to do. Right. Another last thought on signals before we move on to the current situation is that a lot of times somehow retail investors completely miss out on the fact that governments, large institutions, these are very smart people. They know how the public is likely to react to a certain signal. Right. So a lot of times, a lot of these signals are there to make you think or behave in a certain way. And for some reason, this very, very important fact about signals is completely lost, and retail investors simply either don't know about this or completely choose to ignore this single fact, right? So having said that, with all that out of the way about signals, now the question arises, what is happening today? Not surprisingly, there are some very interesting signals and developments that are taking place within Yes Bank right now. So for example, the bank's management has successfully sealed the deal to sell off 48,000 crores of bad loans that were lying around on the bank's balance sheet. And those created a lot of uncertainty. So obviously that's going to free up a lot of corporate capacity to be able to move on from those legacy issues. So that's a positive. But more importantly, that was a very important precondition for other private equity players to feel comfortable putting up money in the bank, right? And recently, RBI has given a conditional nod to Carlyle and Advent, both of which are very, very reputed players in the private equity game. And they're going to be investing around 9,000 crores into Yes Bank as a combination of shares and warrants. Now, the shares have been issued roughly around 13 to 14.5 rupees per share, and the warrants have been issued at 15 rupees per share. So those are the levels at which these players are comfortable investing in Yes Bank stock. Now, those are positive developments. On the negative side, there are some signals. For example, the biggest uncertainty there is that the moratorium on the trading of Yes Bank shares is going to end in March 2023, which is when all these institutions, these mutual funds, all these banks that had invested in Yes Bank as a part of the bailout plan, they will be able to sell off the shares, right? Retail investors, a large chunk of Yes Bank ownership or a significant chunk is with retail investors. So how they're going to behave? Will they sell out their shares? Will they continue to hold? We don't know that. But as we've already established, signals alone are very speculative, and you don't want to base your decisions or thought process around signals purely. So what do? Well, you go back to the first principles, right? Where does the value of a business come? The value of a business is derived from its profitability, and there has to be an element of growth in that. And profitability in turn is dependent on ROA, and return on equity. So these are two common ratios that can be used to check the profitability. So let's talk about the factors that impact ROA and ROE. The best way to understand this is by using an ROA tree. Now, the ROA tree is a simple framework, and we've made detailed videos on this topic in the past, which I'll link somewhere in the video. Please check it out. It basically tells us what are the drivers of ROA. Now, what is ROA for those of us who are relatively new? ROA is simply net profit divided by the total assets. It tells us that how much efficiency the bank is able to generate. So, for example, for every 100 rupees of total assets, how much net profit can the bank extract from its business, right? And because banking is a low margin business, even the best banks earn around 2% ROA, right? And that's considered to be very, very good, whereas a respectable threshold is around 1%. So currently the numbers where we stand are, and by the way, there are three key drivers of ROA, right? Net interest margin, cost to assets, and credit cost, right? If we look at how these numbers are flowing together to give us the current ROA in the latest quarter of 0.2%, this is how it looks like. So you have a net interest margin of 2.6%. You add to that fee income, right? That's around 1%. That becomes 3.6%. Out of the 3.6%, you have to deduct the cost, right, which is 2.6% again of the total assets. You get a PPOP of 1%. From that, you deduct your credit cost, which is basically the cost that you have to deduct from the income statement because you had given loans, you didn't get them back, so you have to take that as an expense. That is the credit cost. That is around 1% of the total, sorry, that is around 0.8% of the total assets recently. And that, if you deduct from 1%, you get 0.2% ROA. Now, these are the current numbers, right? These are obviously not great. And for the bank to be re-rated, right, from say price to book value is a measure of valuations. Right now, it's around 1.3, 1.4. For that to be re-rated to around say 1.75 or even 2, it has to improve its ROA. Right? So in order to improve the ROA, the bank has set the following targets for each of those key numbers that we just discussed. Right? So for example, the net interest margin has to increase to 3.2, 3.5. Right? Fee income has to increase from 1 to around 1.2, 1.3. Cost has to come down a little bit. So these are the numbers that the bank is saying that they want to hit. The real question is, can they achieve these numbers? Right? If yes, how long will it take for the bank to achieve those numbers? So according to the management, they're hoping to hit the 0.8% ROA kind of guidance they have given by March 2023. As for that 1% magical threshold, that might be 4 quarters, 6 quarters. They haven't really specified, again, because that's hard to say. But the management itself is not very, doesn't seem very confident on the timelines as to when that 1% ROA can be achieved. So there is some uncertainty around that happening, if at all. That is assuming, if at all, that the management, that the bank can actually hit those numbers. As for the growth side of the equation, it's my opinion, and again, this whole video is my opinion. I reserve the right to be wrong. I think that the growth in Yes Bank, the overall loan growth, right, and therefore profitability, will be very much in line with the overall loan growth in the system. And the reason why I say that is because in order to grow faster than the overall system, it means you're taking market share away from other players. And as of now, there's nothing special. There's nothing that indicates, or nothing that I know of that suggests that Yes Bank is in a position to take away market share, especially because it's a large bank, relatively large bank, and it's competing with other larger players who have not gone through some of the problems that Yes Bank has gone through recently. So it's hard to say that they have the capability of taking market share away from other banks. And in case the overall loan growth in the system slows down, I think Yes Bank is going to suffer in terms of growth as well, right? So again, I believe there is a little bit of uncertainty on that front. And lastly, if we talk about valuations, to be very honest with you, these uncertainties were reflected in the valuations, right? Even till about a month or two back, the bank was trading about, even a few weeks back, at around 1.2 times price to book value, right? And that's one way to measure the valuation of a bank. It's not perfect, but it's one way. As I was thinking, I was writing the thesis for this video, I thought, let me just check out what the price is. And I looked, and even just yesterday, the share price has increased by 12%. So even that comfort, that the only okay thing about this company or this stock was that the valuations were somewhat attractive relative to other banks, and for a very good reason, right? Even that, in my opinion, has kind of evaporated because there's a huge jump in the stock price just yesterday. Now, I'm not saying that just because it has gone up, it's expensive or not expensive. But I think overall, if you look at the thesis, in my humble opinion, again, I reserve the right to be wrong. I think there's nothing in my opinion that gives me confidence to be excited about investing in the bank. So that's my conclusion, that's my opinion, and yeah, that was basically the video. I hope this has been somewhat insightful. If you like the video, please feel free to share it. Please consider subscribing. Hope to see you in the future videos. Thank you.